Alright, welcome back everyone to another video, to another trade recap. I'm not sure how I'm gonna call these videos yet. Might be charting sessions, and I got this idea from Justin Verline because that's how he calls his videos, but I really like this title, so I'm gonna change it to that probably. So it's gonna be like a new series, although I have one video which was not really I think I lost that trade. Also, no more streams for because, well, there's literally zero people watching me while I'm live trading. So there is no real reason. I'd rather just stay focused on the chart, not get distracted by the audience, and just trade in peace, and then do a video like this, where I can explain everything in details, with no rush. Yeah, so let's get into today's topic, which is this trade setup that I took. You can see there these are the executions from yesterday. These are today's executions. I'm trading on paper. So for those who don't know, that's demo trading. It's not real money yet. I'm not even trying to get evaluated on prop firm challenge because, well, I've failed plenty of those. And it's like, it costs money, and I can no longer afford to buy those. Not at the moment, so that's still in the process. But meanwhile, we can build back our confidence because I lost a lot of confidence in the process because I didn't really know what I was looking for. So yeah, that's still in the process basically. That's the main point here. Okay, so let's get over today's price action. So we can see that we have a daily fair value gap over here, and we can see that this was yesterday's low and this was yesterday's high. We're gonna mark that as buy side and sell side. Liquidity pools on a 4-hour time frame, we can see that these are actually swing highs. I mean, it was visible before, but still. And we can see, wait, I'm gonna replay this. So yeah, that's before the market open. There's a 4-hour fair value gap, which means that we should tap into and reject it. But right now we have a daily fair value gap, which is basically stronger than the 4-hour because this is on a higher time frame, which means that we should still see bullish price action. We do have more buy side generated, and if we take a look at it with an indicator, we can see that this high was actually an Asian buy side liquidity level. So that's going to be the first one, the closer one, the most obvious target, most easy, like the easiest to trade to. So yeah, that's going to be a take profit level. As you can see, I've got everything marked out basically. I'm gonna remove this one. I'm gonna remove this one. No, let's just leave it here. It was not here before, but it doesn't really matter. Oh, I have this 1-hour fair value gap marked out, so this was quite irrelevant. Yeah, so when I opened the markets, I mean the charts, this is what I was seeing. We have, oh yeah, the next hours are already gonna play out. So we are coming off of this daily fair value gap with the double SMT at this low. So this is definitely a protected low. This one could also be. We can see that the order flow is bullish, so I'm guessing that this high is actually the like the high that we're targeting. Oh wait, something got messed up, but it doesn't matter. So yeah, this is the Asian high. it formed almost at the open of the Asian session. This is the Asian low that created an SMT, so that's a confluence to go hunt this buy side liquidity. We also disrespected this hourly bearish fair value gap, which only adds on to the bias that we already have. Looking at the 15-minute time frame, we can see that the order flow is quite slow. It is bullish, but we don't have any 15-minute fair value gap, a bullish fair value gap that we could retrace back into, see the structure that would confirm then a move higher. So because of that, I was not expecting a clear price action right away from the market open, and I was completely correct actually. So yeah, the next candle is the market open, so nothing is really going on here. We can see that also we have an equilibrium sitting right below here. Let's zoom in. Okay, we have a bunch of buy side generated, bunch of equal highs. There's low resistance liquidity around here. This is expected to get ran at some point. And what we can see here is that price actually swept these equal lows, these two. At this point, I was not really looking for any kind of trade yet, because I only know that this got ran through. I am expecting a bullish setup, but I gotta be careful because, as I said in the beginning, the price action is very slow and we don't have a good indication of where the price wants to actually move. So I was just sitting through this. I saw this move. I was kind of trying to calculate how much I could have made, where I could have entered, but this was not a clear setup, so it doesn't really matter. So I was waiting to see a displacement in some direction, and we got a displacement. This was a clear displacement, a market structure shift, or a change in state of delivery. That was clear. That was pretty clear. I did not actually annotate this like this in real time, but this was my thought process behind it. So we have internal sell side swept. We've got displacement with a, oh yeah, that's about to happen yet, with a 1 minute fair value gap, which is actually a 2 minute and a 3 minute fair value gap, but 2 minute was a lot clearer one, was the clearer one, sorry. As you can see, it's this right here. Also, oh yes, also price rebalance to equilibrium that we got marked out over here. So that's another confluence to go back up. So that's a 2 minute fair value gap. And now that you have our higher time frame bias, in which direction we want to go. Also, if you want to take a look, there's also 3 minutes, but as I said, the 2 minute is just better. And there's still no opportunity actually to take a trade from. So that's a good sign. We did not break through this level yet, so this is still a target, but how are we gonna deliver now all the way up? We're gonna do that by generating more internal buy side, which is basically also an external range liquidity, and this right here is not a good entry. I mean, it could work. There's a breaker. This is the breaker, but it's not clear. So yeah, I was waiting. You're gonna see from the executions that I was indeed waiting. So I was waiting for more because I'm waiting for more structure, and we're gonna go over my my strategy, my trading edge, in some other video that I might do very soon, just so that you're gonna know how am I actually analyzing the charts, and what am I actually waiting for before taking a trade. So even if this move would go on without me, I would be totally fine because I had no conviction in actually taking a trade here. So I let the price do its thing. We came all the way down into the equilibrium or the optimal trade entry area, which is basically this pocket right here, because it is in the discount. If you want to go back to the premium, oh wait, this was way too quick. Okay, so at this point, what we see here is another bearish fair value gap that got respected, but this only got respected because we had equal lows that acted as a internal sell side liquidity swept. Still not taking a trade. This would actually be a very good entry. We could enter off of here. Maybe, yeah, it would almost get hit. We would have to put stop loss below this and then actually target all the way up. But this was not yet the setup. This was just one option to take a trade from. But because of this bearish fair value gap, I had to see more confluences. And what a good confluence would be is either we get another market structure shift or changing state of delivery here, or we see this bearish fair value gap get disrespected, because that means that we're going to create more bullish order flow again. This right here is a good sign. We came back down. I believe there's an SMT at this point. And there actually is. There's an SMT between these lows, a divergence between the market, between the financial instruments, and I did take a trade right here. Why? Well, because, oh wait, my stop loss was below here. It was around here, so yeah, I was targeting at least up to this point. This was basically my first target, but this Asian high buy side liquidity level was just too clear. So yeah, this was my initial entry around this area, and then I basically let the market do its thing. After we saw this candle close above this high, this was a change in the state of delivery, because there was like a series of down close candles that got ran through and closed above. And after we rebalanced the price, pushed back up, I re-entered just around this area actually, and I added another 4 contracts, so I was in full 10 contracts, and I moved my stop just at around this area to keep my risk the same. So as you can see, the reward here is actually bigger. But my risk is the same, and that's how you can actually increase your risk to reward ratio, meanwhile keeping the same risk, because you just have to move your stop loss closer to the averaged out entry. And from this point, we got everything that we need. Why? We have a displacement with a higher time frame imbalance. We have a bearish confluence that got disrespected. So this is this bearish fair value gap that got ran through and confirmed with this candle. So I added more contracts, and now we're actually reacting nicely from this area. We just displaced above back this bullish fair value gap, so there's basically no stopping this price, and that's how it went. First target was hit. I decided to I decided to not take any profits here, because I was thinking about, well, ES already took out Asian high at this point, so if this is indeed the draw liquidity right now, there's no reason that it's stopping at this area, because ES already did its thing with this high. So, and if I am targeting higher, then this should be the clear target. So that was my thought process behind it. And then I saw this fair value gap, which only confirmed our bias that the price is indeed targeting this high. I was not scared of this. I mean, I was thinking about, like, if the price comes back up here, that I might take out most of the contracts, but as you can see, there's relatively equal highs here, which act as a good buy side liquidity pool, and that should mean that we are still generating buy side liquidity to take out right away, basically. And price reached our level. I took out, like, this is where I took most of the position off. I'm not sure how can I do this. I'm not really sure, but yeah, basically I took most of the positions out. 8 out of 10 contracts were taken out for a nice profit, and I let the rest of the 2 just sit at the break even. And at this point, buy side was taken, the relatively equal highs were taken all out, and ES is already, like, waiting for us to drop. And this is where I should have taken all of my contracts out. Basically, actually, I was targeting all the way up here. Up here, but that did not happen, and so the rest of the contracts got stopped out at the break even. But we secured our profit, so that's totally fine, actually. And yeah, the price simply just sold back off. This ain't gonna be correct, actually, but it's all right, because I got stopped out here. And this was basically today's opportunity for me. I sometimes invert the scale because right now it's easier for me to spot longs, and I should have seen that this is like I already knew that this was a target. But if this is a target for longs and not any higher, well, right now it would be lower, but if this is the clear target, then after this we're gonna target some form of sell side, which is on the upside right now, which would obviously be these equal lows right here. And this move got confirmed here because we have another displacement back down, displacement through a series, through through 3 consecutive candles. I'm not sure how that's spelled. Consecutive candles. I'm pretty sure that's correct, but if it's not, someone correct me please in the comments. So yeah, another market structure shift, or a change in state of delivery, however you want to call it. Price retraced back into the OTE, held this level perfectly and rejected it, and we could have at least entered inside of this candle and target all the way down here, which would have been another a 1 to 3 trade. Wait. Oh yeah, it's this one. Oh yeah, to the tick. Yeah, I was targeting the wrong. Well, almost 1 to 3, doesn't really matter. But yeah, to the tick. As you can see, like to the tick. This was very precise. But yeah, I did not recognize this because I'm better at spotting longs right now. I used to be better at spotting shorts, but yeah. And then what price did was it just chopped for the most of the day. It was very slow because it's a day after the bank holiday, and I just decided to step away because I don't need to actually trade anymore because I got my bag, I secured my profits, and that was it. And this is where we are sitting at right now. But yeah, so as you can see, yeah, I got stopped out here. Not over here, but here. So yeah, this was a trade that I took. I hope you learned something today. If not, I just hope you did. If there's anything else you want to know, comment down below. I'm glad to engage with you, to answer all your questions. This is demo, as I've said. I'm taking a break from basically setting any goals for myself, to myself right now, because I am just trying to build confidence in the setups that I take, confidence in my trading edge, that I'm still, well, right now I know what I'm looking for, and it's been paying off in a sense that I am building more confidence with my strategy, and to actually know how to stay patient, because that's basically the most important part, is to stay patient for your setup, because you can't just take random trades and expect to be profitable. And then of course risk managing. And yeah, as you can see, this was like only $100 of risk, and I still managed to get 520 out of this trade, because this trade was actually a 1 to wait, where was it? I cannot. Well, that's unfortunate. So yeah, it was a 1 to 6, basically a 1 to 6 risk to reward ratio trade, which was great. And that means that even with small money, you can actually make a lot of money. You just gotta be consistent with it and consistently trade the same thing over and over again, and not just jump from strategy to strategy. And yeah, that's basically it. So again, thank you for watching, and I'll be seeing you in the next video. Bye bye.